Thank you all for joining us. We're waiting, we're just giving a few minutes for some other members to join us, then we can start. Once again, good morning and welcome to our webinar. This webinar is about the Uganda's economic outlook and the post-pandemic recovery, and is going to be presented to us by Grant Thornton Advisory East Africa Limited. My name is Martha Kopsinji, an associate in the advisory department, and currently displayed on our screens are the house rules. So I ask you kindly to follow these rules so that you can have a smooth running of the webinar. Also, in case during the webinar you have some questions, feel free to put them in our chat section so that at the end of the webinar, we can respond to these questions. So before we can go through this webinar, we have our managing partner, Mr. Anil Patel, who is going to give us opening remarks. For those of you who may not know Mr. Anil Patel, he is a chartered accountant from the Institute of Chartered Accountants of India, and he holds a bachelor's degree in commerce. He has over 21 years of experience, and he has worked in the different sectors of Uganda. He also has a lot of experience in audit, tax, and advisory services. Mr. Anil, I would like you to take the floor and address our guests.
Thank you very much, Martha. Thank you. Good morning, everyone. Good morning, Grant Thornton Advisory team, our clients, our friends, and everyone who is present in this webinar. I would like to thank you because learning is not easy. It takes a lot of courage. It requires the time. So let me first of all, thank you so much for everyone who is attending this webinar. That shows your interest, that shows your courage that you would like to do your business better. So thank you for that. Let me welcome each of you to this webinar of Grant Thornton. That's going to be on the economic outlook of Uganda. As we all know, generally, whenever we go everywhere in a social gathering or in a business, people usually ask, how is your economy doing? And this is the first question that is being asked by the people, especially outsiders, when we are traveling or when we are in another country. And generally, we give our response based on, a general public knowledge as opposed to a specific idea that we should know about our country. So why economic outlook of any country is important? Because we all know that it is the drivers of the economy that instills or that fuels the growth in the country. And it is the growth of the economy that drives the business. And everyone is interested in business, because if it is business is growing in any country, service delivery is increasing in the country, the government spending increases in the country, that is when the business fuels. And that's why everyone is interested in the economic outlook, because that generally gives an idea about how the country is going to perform. Um, so today, our advisory team is going to present to you about the economic outlook of 2022 with the theme revolving around post-pandemic recovery. We all have experienced very bad time as far as our businesses are concerned. Also from the perspective of the fear in our quality of the life, that also have affected. We have also lost many of our colleagues, our friends at young age, and that has made us wonder about the importance of business, of our life, of work-life balance in our life. And we have aligned our way of living and our way of conducting the business, including the training that is going on right now. You see, we are able to conduct such webinar instead of the physical seminar. So this we have made these alignments. So based on that, post-pandemic recovery, how is business is back in the society. So our team, advisory team, is going to be making this presentation based on the historical performance of the economy. Obviously, we have to speak about the facts and figures, and facts and figures can only be available based on the historic things that has happened. So it will also, they will do it through the performance on the macroeconomic level, as well as the analysis of the major sectors of our economy. We hope that this insight will help you understand economy better, make alignment in your businesses. If you are working for any organization, still you must be contributing in the business where you are working, and I'm sure you will gain a good understanding that will help you to support your business. Let me wish a great deliberation throughout this webinar. Please do ask questions if you have at the end of each session or at the end of the webinar. Martha will guide you. Thank you so much once again. All the best. Over to you, Martha.
Thank you so much, Mr. Anil, for those wonderful remarks, opening remarks. Right now, as Mr. Anil mentioned, our webinar is going to have several discussion points, among which we shall have the macroeconomic analysis of 2021, the sector analysis of 2021, and also the economic forecast. So at this moment, allow me to invite Hemal Shah, who is going to be our first presenter. For those who may not know Hemal Shah, she is our manager here at Grant Thornton Advisory East Africa Limited, and she's also a chartered accountant from the Institute of Chartered Accountants of India. She also holds a master's in computer applications and IT. Hemal has vast experience in consulting services. She has worked with several clients. She has helped several clients build their businesses. So at this moment, allow me to invite Hemal to take the floor.
Thank you so much, Martha. A very good morning and warm welcome to all our esteemed clients and attendees of this webinar. Most of our clients and attendees running their businesses may have a question on whether the products or services will have a greater potential and growth in this year compared to last one. How is the market going to behave? Or how are the prices and the products going to be impacted? We are all aware about a lot of dynamics around the pandemic that we just experienced. The final decision in relation to oil and gas, and a lot of other parameters that has impacted our economy. Answer to a lot of our questions actually is through analysis of our economy. Various macroeconomic factors provides understanding of how our Ugandan economy has performed over the last year, and it also provides an indication of how it is anticipated to perform in the year to come. On request of some of our clients, we have tried to bring about these concepts in a very lucid fashion for a layman to understand and appreciate the parameters. However, while we try to do so, we would request if there are any questions, please feel free to put them in the chat box and we shall address them towards the end of the session. The first macroeconomic indicator for the Ugandan economy is inflation. We all know that inflation is the rate of increase in prices over a given period of time. And it's typically a broad measure as an overall increase in the cost of living in the country. As we can see from the graph, the inflation remains subdued with the headline inflation reaching about 2.9% at the end of December 2021. This is way below the target inflation of 5% as anticipated, and it is marked lower than the other economies in the region, including Kenya, Ghana, Nigeria, and South Africa. We would like to also inform that while the headline inflation remained at 2.9%, even the core inflation remained at the same rate in Uganda. This lower rate of inflation also indicates a bit of low purchasing power and bit of lower demand, but it also helps the economy to stay at a stabilized level, like how we can see from the last 5 years, it has stayed under 5%. So with that, I would just like to put up a poll to all our attendees here on what is their perception in relation to inflation, or how do they anticipate this inflation to go in 2022. Of course, everyone can have their own way of thinking, and I hope all of you can see the poll that is available on the screen. And I would request you to just put up your anticipation in relation to where do you see inflation in Uganda growing in 2022, or do you see it subduing further to 2%, or you see it reaching probably 3, 4, or 5%? I would just like to give it a minute for people to just submit their polls. I can see we have received 15 responses. I would just like to give couple of more minutes. I can see some of the guests responding. It is even going to increase beyond 5%. Okay, 19 responses. Just a few more seconds. Okay. I think we have about 40% of the attendees saying that it is going to reach 5%, some indicating it may even reach higher than 5%, whereas we have 35% of the population saying it is going to be at 3%, and 25% indicating around there at 4%. So I would just like to inform that while we are in March 2022, that one of January and February 2022 has already reached 3.1 to 3.2%. And you are aware about the increase in the prices of the fuel, which crossed 5,000 shillings a liter. And of course, some anticipation of economy really opening up with the opening up of schools and other sectors of economy really benefiting to just bring in a higher demand, and then eventually increasing to a slightly higher inflation rate. So yes, with the 43% of the people contributing, indicating that it is going to be around 5%. It is also interesting for us to understand if what would be the major parameters that would actually impact the increase in the inflation. There was not even a single attendee who submitted a vote indicating that the inflation is going to go down to 2%. So we all collectively believe that, yes, the inflation is going to increase. But I would also like to launch another poll to get the perception in relation to which could be the key factors that could result in the increase in inflation of the country. We all know that US inflation rate has increased. The war between Russia and Ukraine is hot news all across, and we are aware about the Russia sanctions leading to spike in the oil price, which also has impacted the global economy hugely. We all know that the final decision in relation to oil and gas was made, and USD 3 billion is going to be injected into economy right in 2022. And we have seen Uganda shilling appreciating against US dollars. So from all these responses, I would like to wait for attendees to actually provide their comments on what could be the key factors that could result in an increase in inflation in the country. So while I'm receiving the responses, I can see the comment from the guest that there is a huge increase in commodities, raw materials, and freight over 15%, which is also a reason he's indicating in relation to the increase in inflation. Okay. fair. We have received about 14 responses. Just a couple of seconds to see how people are anticipating the reasons or the factors which could lead to increase in inflation in the country. Excuse me. Okay, so up to now we have about 56% of the attendees indicating, or 58% rather, as I keep on receiving the responses indicating that the Russia sanctions leading to spike in oil price is going to be the major factor that could result in increase in inflation in the country. I'm also of the similar opinion. Okay, now I can see it raising to 62% with 21 responses. I think that is a great awareness, 64%. Yeah, I think we all understand the inflation and its parameters, and we are hopeful that although it's a bit of a concern if the inflation will really raise above 5%, but also it does indicate some boost in the economy, some demand of the products, eventually the purchasing power increasing, and economic growing and developing. So with that interactive discussions in relation to inflation, we would like to go to our next macroeconomic indicator, which is the monetary policy. The monetary policy refers to the use of various instruments under central government's control to regulate and to influence the use of money, the availability, the cost, and essentially how the money is going to be rotated within the economy. The main objective of the monetary policy is to maintain the price stability. And how is this price stability maintained? So the central bank monetary policy has primary control over the central bank rate, which essentially also impacts the commercial banking, commercial lending rates, and also it impacts in certain way, through the exchange rate and the other parameters. But primarily, when we talk about the central bank rate, we can see from the graph that is mentioned here that the Monetary Policy Committee maintained the central bank rate at 6.5% in December 2021. This is basically the rate at which the central bank lends to the commercial banks. This was 7% in the first half of 2021, which was lowered further by 0.5% to bring it down to 6.5% in July 2021. And since then, it has been maintained at the same level. The further lowering down of the interest rate is primarily due to the economy's continued need for a considerable monetary policy support, despite the signs of economic activity gradually normalizing. So how is this linked to the inflation, and how central bank tries to regulate the inflation through this CBR? Because when Bank of Uganda expects the inflation to increase above 5%, it would essentially increase the CBR to signal the potential rise in the interest rate in the economy. This raises the cost of borrowing, and as a result, it discourages the firms and individuals from unnecessary borrowings, which eventually suppresses the consumption a bit, and suppressed consumption reduces the overall demand and thereby reducing or containing the inflation in the economy. So it's a way of how the economy is overall monitored by the way of monetary policy. We can see the commercial lending rates of the commercial banks have also remained quite monitored, and they have been declined during the period of 2020-2021 to really support the economy to grow and to borrow. And this was majorly dominated by manufacturing and trading sectors, respectively. Going to the next macroeconomic factor, it is the exchange rate, and we are all well aware that the exchange rate has somehow maintained its stability throughout the last year to be around an average of 3,550 shillings per dollar. While it has remained stable, there is an anticipation that it is going to increase slightly. So despite this improvement, the depreciation is still expected in near terms as the import will increase in line with the recovery in the economy. Furthermore, the global strengthening of US dollar against major currencies across the globe, the recovery of the domestic demand of the foreign currency, and the negative sentiments that were in anticipation of the offshore demand are poised to lead some depreciation in short term in relation to the exchange rate. Going to the next economic indicator is the GDP of the country. The gross domestic product is the standard measure of the value created through the production of the goods or services in the country during a certain period. So it also measures the income earned from that production or the total spent on the final goods and services, excluding imports. The GDP per capita shows uh, the country's GDP that is divided into population. But here on the screen, we can see the GDP of the economy of Uganda. We can see from 2017, when it was 108 trillion Ugandan shillings, it has gradually increased to 147 trillion Ugandan shillings. Between 2020 and 2021 also, we can see there's a huge jump from 139 trillion to 147 trillion, which represents a growth of 3.4% compared to 3% that was registered in 2020. All the macroeconomic indicators we talked about are certainly driven by, or they impact various sectors of the economy on the screen. We are also showing the contribution by various sectors in Uganda towards the growth of GDP in Uganda. So with that, I would just like to end here, and we go back to understand the sectorial analysis in a bit further detail. So over to you, Martha, to take this forward.
Thank you so much, Hemal, for this insightful discussion. I hope we've all learned a lot about our country, about the inflation, about the interest rates. Thank you so much, Hemal. And at this moment, I would like you to allow me invite our second presenter for today. His name is Luzigamanzi Solomon. He is an advisor associate here at Grant Thornton Advisory East Africa Limited. He has ACCA, and he has also worked on several clients. He has over 5 years of experience handling client assignments in the different sectors of our economy. So at this moment, Solomon, the floor is yours.
Thank you very much, Martha. Once again, I'd like to welcome you all to this presentation we're having today, the webinar. So to get into it, I'm going to discuss a sector analysis of different sectors in the country, starting with agriculture, of course. But before I get into it, I'd just like to give you a small poll, find out what you think of the agriculture sector. So my question to you today is, what do you think was the GDP contribution of agriculture to Uganda's economy in 2021? Please respond as soon as you can, so I can see what the public or what the audience is suspecting to be the economic contribution that agriculture has on the economy. All right, I'm seeing 10 responses. Let me just give a few seconds for some more responses. Let it reach 20. Then I go on. Okay. Yes, so we've reached 20. I can say we can close the poll. I'm seeing that 45% of you have responded by saying 23.7, 35%, 33% says 45.2, 19% say 64.93. I'm glad to see that most of you believe that agriculture is a very big component of our economy. But I would have to say that 48% of you were correct. It is 23.7. Well done. So let me just go forward into our sector analysis. Right, so agriculture, as was shown in the poll before, accounts for 23.7% of GDP and 31% of export earnings. You know that our chief export is coffee. So in that sense, you realize that agriculture is a very big component of our economy. Lots of exports of coffee go around the world. Ugandan coffee is among the most consumed in the world, and it's a big component of our foreign earnings worldwide. But still, we have other products that we stimulate the economy quite fundamentally. We have tea, cotton, tobacco, cereals, vegetables, among others, right? So we can see for sure that agriculture is a very active component of our economy. Just to look at the chart on the right, we see loan applications approved per quarter for agriculture are rising. You know, the sector is getting about 300 billions in terms of loan applications. Many investors are getting money to essentially expand their agribusiness and their agriculture ventures. So you can see that this is a very fundamental part of Uganda's economy. Now, another thing you have to notice, 70% of employment is in the agriculture sector. So it's a very fundamental thing that we have to consider when looking at our economy. Now, just before I go forward, I just want to share another poll just to gain your understanding of the agriculture sector. So this poll asks, which component of agriculture contributes most to GDP? Please feel free to give your responses. Okay. Let's get it to about 15. We have 14 responses now. Okay, let's reach 20 and then I proceed. Okay, I guess we have reached about 18 responses, 20 responses actually. 50% of you say cash crops, 35% of you say food crops. Livestock and fisheries account 40% of you are saying it's livestock and fisheries. So all in all, I'm saying that most of you believe it's cash crops. Well, one thing you have to consider here is that 70% of Uganda's economy is employed in agriculture. This factors in very many other factors, you know, because due to commercialization, cash crops such as coffee, such as tea, such as tobacco are very efficient and don't need as much labor. So when you factor that in, you start to realize that a large portion of the economy is basically engaged in agriculture in other sectors. Now that is why I have to inform you that food crops are actually account for the highest amount of agriculture activity. A lot of Ugandans are sustainable farmers, subsistence farmers who do farming on a small scale. Maybe they'll sell a bit of their farm produce, but most of them are just doing it to survive, you know. So that's a major deficiency in our sector. We are not commercialized enough to really grow our agriculture sector to where it should be, because ideally many forecasts have predicted that Uganda has a potential to be a food hub in the region. You know, you can supply food to a lot of countries without running out, because we have very good soils, we have very fertile grounds. So a lot of it is underutilized because of a lack of commercialization. So yeah, thank you all for that, for the response in agriculture. Hope this has enticed you a bit. So moving on, I'm going to go to oil and gas, which is one of the sectors that's primed to lead us further in the next few years. So now oil and gas, as you are well aware, one thing that happened is we have just in February, we just got the FDI, the final investment decision, FID, final investment decision being made, which basically stated that now we have allowed these few companies to run our oil production going forward. So what this means is that all these companies now know exactly the way forward, and they're going to start to invest straight away. So for instance, one thing you should note is about 3 billion is going to be invested in the economy just this year alone. That's a very significant amount of investment money. In next year, we expect 3.5 billion to be invested. So one thing you should note is there are 4 major entities that are going to take part in the oil sector going forward. Those are Uganda National Oil Company, Total Energies, China National Offshore Oil Corporation, CNOC, and Tanzania Petroleum Development Corporation. As you are well aware, there is a plan for the pipeline to flow through Tanzania from Hoima, which will make the transportation of oil much more efficient. Now, just to also kind of gauge your understanding of the oil sector, I wanted to add a new poll. Just let me get it for you. So my question to you is, if you can see this, is what is the projected oil revenue Uganda stands to make annually from 2025 once production commences? So take your time to answer. Let's get like 20 responses and then we'll move on. All right, I'm seeing 67% are saying 5 million barrels, $400 million. 25% are saying 2.8 billion, 2.08 billion, 26 million barrels. Let's go on. Let's get to about 20 responses and move on. Okay, I'm seeing 14 responses. 38% saying 5 million barrels, 400 million. 31% saying 14 million barrels, $1.1 billion. Yeah, we have 20 responses and 40% as the majority have said it's going to be $400 million per year. Now, the correct answer is actually $5.8 million a year, given taking into account that about 200,000 barrels can be extracted a day. So at full capacity, Uganda stands to make about 5.8 billion in sales because of the oil production, which is a very large amount of money. Given Uganda's GDP, this will be a very significant boost to our economy. 5.8 billion is a good sum of money. That's what we can project to make starting 2025 once the production starts. So thank you all for that. I think let me just see if there's another poll that I can share with you on oil. Anyway, let me just move on for the interest of time. So we're moving on to construction. Now, as you know, construction is a key in our sector. You know, it has been growing and it has been booming, but it was greatly affected by the lockdown restrictions that were put in place because of COVID. So one thing you should know about construction is that the main driver of construction is our government. Our government supplies most of the government contracts. It provides most of the capital to construct the roads, to construct things like airports, things like flyovers. And the government's take has been that we have to really invest in infrastructure to encourage economic development, because once you have infrastructure, you invite more investors to come in. It makes it easier for people to do business because transportation is easier if you have enough roads. And if you have good roads, if you have, for example, the Hoima airport, the proposed Chibale airport in Hoima, would be very helpful in boosting the oil sector as well and increasing basic economic activity. So with that in mind, you know, you have to realize that we can expect the construction industry to grow to about 5.2 billion by 2030, not only because of government trying to focus on the National Development Plan, seeking to increase how much they're investing in infrastructure, but also because of the oil sector coming into full throttle. We have the Tanga pipeline, which is a major infrastructural project that's going to run from Hoima, Mubende, Chenjuru district, which will really be a major undertaking. A lot of money is going to be fed into the economy because of that. A lot of contracts will be given to different construction suppliers in the country and the economy. So that's something to expect. We can expect 9.7% of growth in the sector going forward. Not only that, also have to consider that we have had very many construction projects over the past few years. We have the expressway that was recently commissioned, I think earlier on this year, making travel to Entebbe much faster, which is very good for expatriates coming in from the airport, business people coming in and going to the airport, which is going to encourage and stimulate the economy further. We also have things like the dams, the hydroelectric power plants, which have been developing in different areas. We have the Simba Dam that was commissioned a while ago. We have the Karuma Dam, which is going to be commissioned this year alone. We have also very many other smaller capacity dams around, or hydroelectric plants in the region that will be very beneficial going forward. So that's about it for the construction sector. Now, real estate as well, as you know, real estate is basically providing residential office space to people around the region. Now, most of that is concentrated here in Kampala because that's where most of the business activity takes place. That's where most of the offices are. Most NGOs are located here. So we're seeing that also, like, there's been a decline in credit growth, of course, because of COVID and the pandemic restrictions. People are working from home, meaning that some offices closed for a while, occupancy dipped a bit. So we're seeing that occupancy is now at 68%, yet it could have been much higher if COVID had not really impacted the economy as much as it has. So that's something to take into consideration when you're looking at the sector. So real estate, as you know, especially in banking, if you notice that many bankers who were formerly bullish about the sector have kind of dimmed down. They have reduced how much they're willing to invest in the sector. You'll find that if you have a real estate project and you're looking for financing, you may have a bit of a hurdle convincing a banker to bankroll the real estate project because they found it very risky. They're finding major defaults in the sector and so forth. So that's something to consider going forward. So at a juncture, let me move on to the next sector, which is tourism. Now, as one thing you'll notice is that construction real estate were all affected by COVID, but none as much as tourism sector. If you remember in 2019, there were major efforts to stimulate the tourism sector, which had really proven to be a very liquid and a very optimistic part of the sector. Many tourists were coming in to see Uganda, to see Uganda's parks, to see Uganda's natural resources, which was very beneficial. We found like there was an increase in the number of tourists coming into the country. Not only tourists, we also find that a number of expatriates coming here want to travel around the country to really see what Uganda is all about. So you have to note that this sector was really badly hit by the pandemic related restrictions. But we still remember that 7.7% tourism contributes 7.7% to GDP, which is a very high number. This is almost about maybe 40% of what agriculture contributes, and agriculture is the biggest contributor to economic development or to the GDP growth in the country. So that's something to consider when you're looking at the tourism sector. So we expect like arrivals to kind of grow to about 2%, given that pandemic is kind of slowing down, vaccinations have been rolled out, people are allowed to come in and move. So as the country opens up, as the world opens up, movement reduces in its restrictions, we'll find that tourism will pick up once again. Now moving to banking. So one key factor about banking is that our lending rates are normally based on the monetary policy that central bank takes. So one thing you need to know, as Hemal had mentioned, is that the central bank has continued to lower its rate. Right now it's at 6.5% from 7% in June, which was even higher back in the day. I remember there was a time when the central bank, that was 2011, The central bank raised this rate to 18% because of high inflation. But right now they're trying to stimulate the economy, encourage people to encourage bankers to lend at a low rate, encouraging people to grow, to borrow, and therefore grow or expand their enterprises or to start up new ventures. So that's one thing you should note. Before I go forward, I just want to share a poll here. Just hold on. So let me just go on a bit to avoid any confusion. So one thing I wanted to discuss is commercial bank shilling denominated lending rates have continued to grow because now they're encouraging more. Now investors are now more encouraged to borrow in Uganda shillings, because they're trying to basically gain from the dollar. I mean, from the lower interest rates that have been noticed, because you see that there was cases where you'd find that before you get an interest rate of about 25%, now it's coming down to about 16%. So a lot of businesses are encouraged to grow and develop their businesses by borrowing from banks. Now, to talk about non-performing loans. One thing you should note about non-performing loans is that they are a very good indicator of the performance of the economy and also of the banks, because if you have your assets are performing well, that means that the economy is growing, and which is a good sign, right? So I've just shared a poll with you regarding non-performing loans. Please respond to that as soon as you can. Let's just get to 20 responses. So I was asking, what does a high non-performing loan ratio indicate? So we're saying 6 responses. Let's get 20. Yeah, as I was just describing, the NLP's non-performing loan ratio has kind of maintained at 5.44% in this year. Before it had, in 2017, for example, it had reached about 10%, which was very high. And it was because of government contracts, which were not really releasing cash to pay suppliers. But right now it has gone down to about 5.4%. All right, right now we have 17 responses. Most of you are saying a large number of debtors who have made defaults on monthly disbursements. We have 18 responses, 28% saying business losses. 11% are saying the bank will collapse. 6% are saying good performance of the asset. Okay, I think we have 18 responses. Let me just close the, okay, 20 responses. Okay, so 55% of you have said that a large number of debtors who have made defaults on monthly disbursements, and that's actually very correct, because for a loan to become non-performing, there has to be an indication that the business or the debtor is unable to clear their debts. So that's good that you're all aware of that. So my point is that the transactions have become much, bank loans have become generally less large and less significant, which is a very good thing. So moving on to the next slide, let me talk about insurance. Now, insurance is still a small sector in the country, but still we're seeing a good growth in the sector because, for example, we saw 0.74% of gross premiums have increased, from 2020, which is a good sign. Now, maybe what I'll try to really reiterate is what are the major components of insurance in Uganda. One thing is non-life insurance, of course, growing higher because people want to insure their businesses, they want to insure their property, they want to insure their health. But one area that has found significant growth is life insurance. Now, life insurance is where individuals basically insure their life. It was a form of a saving kind of thing, but also ensures that in case of disability or in case of death, your family or your loved ones are taken care of. So it has found significant growth, and it's now the second leading second leading contributor to the insurance market in the sector. Moving on to ICT. Now, one new thing you know about ICT, one of the major events that have occurred in the ICT sector is the MTN IPO, which was valued at about $150 million. That was a very massive IPO. This is one of the biggest companies in the country, and that IPO kind of stimulated the finance sector, at least in the equity side of things, quite a bit. However, in other areas, you need to know about mobile money. Mobile money is a very liquid sector in ICT. We're seeing a growth in mobile money, which is unprecedented. There are 32 million mobile money subscriptions in Uganda. That is a very significant number. That's about 80%, because right now our population is about 45 million. So we're looking at about 75% of the population is using mobile money. This has encouraged many different companies to try and invest in the country. For example, we know of Wave, we know of Cheaper Cash, which are trying to take up a bit of that market, but otherwise MTN, Airtel are still dominating, are still making the most out of it. So there's generally a very good growth in the sector. Internet access is increasing. 52% are of 50% have internet access now. You can go to the village and you might have access to internet, because there's been a lot of investment in setting up the infrastructure needed for internet use. So we have about 21 million users of internet in the country right now, which is very big, which is a very significant number, about 50% of the population, which is impressive. So in terms of intertelephone penetration, we have about 69% of people in the country using telephones on a day-to-day basis, which is a good thing for the sector, so it's primed to really grow and primed to really be better in the future because of its usage, because it's becoming like a necessity basically to have a phone, to have internet, and to have mobile money. So that is a factor to consider. And also this is something else that needs to be, which can tie into the banking industry, because mobile money has really put the banking industry at a difficult situation. Just recently the banking industry released agent banking, trying to mitigate or to reduce the impact of mobile money, because people find mobile money much easier to use. You find the penetration of people going to open a bank account is much lower than people having a mobile money account. So that's something to consider in your day-to-day business. ICT has really improved financial transactions. So right now, I'd like to move on to the economic focus for the country and for the globe as a whole. But before that, I would like to just share another poll. So now, as you are well aware, 2020 and 2021 have been generally stagnant or slumpy years because of the COVID-related restrictions. But right now, I'd just like to ask you, from your point of view, which sector do you think was hardest hit by COVID-related restrictions from 2020 to 2021? So let me just give all of you a second to just give your opinion on that. So let's reach about 20 responses. We have 5, manufacturing 40%, real estate 30%, trade 30%, trade now 40%. Okay, continue responses. Okay, we have 16 responses. We have 19. There's a draw, 37 for trade, 37 for real estate. Okay, so I think we shall stop there. So thank you all for your responses. Now, one thing, we have 43% on real estate. Now, the majority of you have chosen real estate, which indicates that you are well aware real estate was badly hit by COVID-related restrictions, because now people couldn't move to office anymore. People are no longer paying rent to the owners of buildings. There was a very deep decline in the sector, not only real estate, but also construction. So since the two are related, I'll say that they were the hardest hit by COVID. So when you when you think about that, you realize that COVID really had an effect that's even going on right now, because even bankers are scared of the sector right now, which is very bad. Essentially, the bubble is busting, so to speak. Real estate had been growing and construction had been growing for quite a while, but because of this pandemic, we find that most people are now kind of taking a step back, looking at other ways to invest and to keep away from the sector. So that's one thing you have to take note of going forward. So now I'm going to share the economic focus for both the global, regional, and as well as Uganda. So first of all, let me discuss what happened in the globe. Global GDP grew by 5.9% in 2021 compared to a decline of 4.4%, which is very good, because, once COVID came in, the pandemic, the restrictions put in place by a number of governments in the world, we saw a slump in the economy by 4.4%, which is very significant. So growing by 5.9% is a good sign, because normally global GDP was standing about 3%, maybe 4%. But because of COVID going down by 4.4%, we have seen a great rise by about 6% in 2021. Now, what caused this to rise? One thing you should think about is the removal of the lockdown measures. A lot of businesses were put on hold because of COVID-related restrictions. Shipping was very low. Movement was very low. Business basically stagnated. In the wider, the larger economies. Hospitality industry basically was put on hold. Airlines were put on hold. I think a number of them even closed. So that's once these restrictions were cooled down quite a bit, the economy started to be re-energized and start to experience some level of growth. So that's one thing you should know about the global GDP, and we can expect it to continue to rise, because now that businesses are energized, they're going to invest more, they're going to increase their economic activity, and we're going to see a global GDP rise once again, more activity, which is good for the globe on the whole. One important thing to note, especially last year, was that inflation in America has started to rise. This was a major event, because one thing from our analysis we found was that supply shortages, especially from China, had really affected the inflation. You find that now that people are coming back to work, now that people have more money in their pocket, they have enough money to buy goods, but the goods are not available, meaning that the shortage of goods is causing like a spike in the price of those goods, which is leading to inflation in those countries. And that has very many problematic effects. For instance, if you have high inflation, that means interest rates are going to have to be increased, which is going to slump the economy even further. So that's a problem that the US and also Europe had faced, because the people had the money to buy the goods, but the goods were unavailable, meaning the prices had to increase. Another important thing to note is fuel prices. First of all, it was earlier on in 2021, fuel prices were about $50. $50 was a small amount, but by November, that increased to $84 per barrel. Now, why that is significant is because, of course, the oil sector has been finding that the price has been going down for a number of years. So in that case, they're trying to limit the amount of production to try and increase or stabilize the price so that they don't run out of money, or they can continue to perform at the levels they were performing before. But just recently, we know about Russia invading Ukraine, which has caused the European nations and US to put sanctions on Russia. Now, what happens is Russia, which is one of the largest producers of oil, is no longer supplying oil to the global economy. What this means is that there's lower supply of oil. Now, because most oil producing nations have tried to put a limit on their capacity utilization and produce less oil, they have found that they're not able to match that demand for oil, which Russia has not been able to fulfill since they invaded Ukraine and since the sanctions were put in place, meaning the price is now going higher. From 84 in November 2021, it's now $115 per barrel. So until maybe they find a way to increase their production, or they're able to find a suitable alternative to Russian oil, we're going to see the price going higher. So this has also affected us in Uganda, and we're struggling with a higher oil price, which may not decline anytime soon. So that's one thing we should keep in mind. And that's one thing that's going to affect the inflation going forward, not only worldwide, but also here in Uganda. So IMF, the International Monetary Fund, projects that there'll be 3.9% growth in advanced economies and 5.9% in emerging economies. Now, of course, emerging economies have stronger growth potential because they're young, they're developing, and they want to see a better growth in the future. Now, in the interest of time, seeing it's already midday, let me move on to the regional outlook. So one thing is the Sub-Saharan Africa has had significant growth, which of course declined by about 2% in 2020 because of lockdown-related restrictions. However, the growth rate has shot up now. It's now about 3.7%, which is a very high figure, going back to pre-2015 levels. So that's something considerable to consider. Like going forward, in East Africa and Africa, we should see a greater growth as the restrictions is. In East Africa, we noted a 4.2% GDP growth. You know, that's better than the sub-Saharan average of 3.7, meaning that East Africa is one of the major contributions to GDP in the continent. You know, so Kenya, Uganda, Tanzania are very stimulative. That's what this indicates. You know, in 2022, we expect that maybe 4.9% is going to the economy is going to grow by 4.9%. That's the African Development Bank, which projected that. So now, one thing you should note about 2022, of course, there's global problems in terms of oil and the Russian conflict that's really stimulating that problem. But in Africa, in Kenya and Ethiopia, we saw from our studies that there's going to be a bit of a slump, mainly because, for example, Ethiopia is facing a challenge with the Tigray conflict. If you've been following the news, the Tigray conflict has been affecting the economy a bit negatively as the government tries to find a way to cool down the impact. In Kenya, we know the national elections, which are very volatile, are going to take place soon, which may also kind of basically lower economic activity, we're just hoping that there's not a big impact like it was in 2008. So that's going to have effects even here in Uganda, because if Kenya has an unstable political election, we'll find that goods will not come into Uganda as fast as we want them to. There'll be greater inflation. So this is going to be a problem going forward. So also another thing to note is, unlike Uganda, NPLs have been quite high in Kenya, Tanzania, and Rwanda. What does NPLs mean? Any NPL means that the bank is not getting the deposits. You know, it also has some macroeconomic indications, meaning that businesses are unable to pay. Why business is not able to pay? Because maybe there's something going wrong with maybe liquidity in the market, something going wrong with the business, with the economic activity. So that's going to be a problem or a hindrance going forward in there. So moving on to the last slide, I want to just share my economic forecast, our economic forecast for Uganda. So one thing is Uganda has finally eased restrictions. Right now, we don't have any restriction in terms of what time we have to get to our homes. We don't have restrictions on movement. So that means the economy can finally start to develop. So the IMF, the International Monetary Fund, projects at about 6%. There'll be 6% GDP growth in the financial year 2022-2023. So that's a very, very optimistic view, because over the past 2 years, we've been growing by about 3% or 3.3%. So we hope that that will continue to increase. Now, if you see the chart, we had reached about 8% in 2017. It dropped down to about 3% because of COVID, but the IMF projects that will continue going higher, and get to about 7% by 2026, 2027. So this is a good sign. Well, however, I'd just like to mention a few hindrances that may affect these projections. You know, for one, what can we say would be a problem is Uganda, you know, the government is very sensitive to COVID, and there have been cases where, you know, like last year in around June, cases spiked a bit, and the government put us in a lockdown, which further slowed down the economy. However, if our vaccination rate is good, if the COVID cases remain stable, we can expect that the outlook is we'll grow by 6%. Another problem to take in mind, which we had forgotten about due to COVID, is public debt and repayments that the government has to face. You know, one thing is the government is a leading spender and so a leading stimulant to the economy. But however, once these repayments get to a high level, government will have to cut down on how much it will have to basically restrict its fiscal policy, so to speak. So if that happens, that means our growth might be affected. That will further hamper the 6% that IMF is expecting. So in all, we have to consider that going forward. Then another thing is climate change. Drought has been very has seen an increase overall around the country. Many farmers are saying that they're not getting as much yield as they would like, and they're finding that they're getting losses, and this may further hamper or obstruct the growth of the agricultural sector. So that's one thing to consider going forward. Now, in the interest of time, let me hand over to Martha to try and see how we can conclude this session. Thank you.
Thank you so much, our presenters, for this insightful and engaging session. And I would like to apologize for going beyond the allotted 1 hour. Please bear with us. We're so sorry for this. And in the interest of time, I would like us to take a few questions from the chat. I saw some questions, but before we go through that, there's going to be a Google form going on. Please kindly register so that at the end of this session, we can provide participation certificates to all the participants. And at this moment, I'm going to read out the question, and Solomon will take us through some of the responses to this question. Solomon and Hemal will take us through these responses. So one of the questions was from Mr. James. He asks, beyond the sanctions on Russia, how likely would Uganda's position on the conflict affect broader economics?
I believe that is a very political question, and there is a lot of uncertainty around there. So certainly Uganda's position is likely to impact. However, Uganda trying to explore its own oil and gas sector, although it is anticipated from 24-25. In a long term, we anticipate that it is going to be subdued, or it is going to be balanced eventually.
Thank you so much, Hemal, for that. And there was a question from Mr. Anil. He asks, is the GDP real actual money value, or is it monetizing matoke, chickens, bicycles, and subsistence farmers?
I would let Solomon answer that question, because let expert respond to that question. Thank you.
Yes, so what the gross domestic product entails is the amount of economic activity that is taking place in the economy in a given year. So what the statisticians and economists do is they project how much has economic activity increased. So they're looking at anything that entails economic activity, something to do with trade, something to do with production. So for example, if a manufacturer says we're increasing our production of bicycles to about 1 million bicycles a day from about 100,000. So that's going to be counted as an estimation for economic activity. So when the economists are predicting GDP growth or GDP, they try to look at it from the perspective of what is the value of, let's say, for example, Ms. Anil said, matoke trees, chickens, bicycles. So all that, as long as productive value, as long as indicating that this is economic activity, it is counted as GDP. So for example, even chickens that Subsistence Farmer has, even the maize farm that has been planted, that is all counted as economic activity. So of course now, like let's say I have planted about 20 hectares of maize, and it is burnt or it is destroyed by maybe bad weather. That means that has to be deducted from the economic activity of the country. So your Uganda Bureau of Statistics, Bank of Uganda are all on ground trying to determine what is the economic activity happening here. If you go to the Uganda Bureau of Statistics, you will find something called the CPI report. Now, CPI report indicates the price changes in the market. Now, not only are they trying to document the price changes, they're also documenting what is the increase in production. They have different teams in different parts of the country trying to monitor that. So you can easily determine and see, oh, we have seen that there are more matoke plants being planted in this region. For example, Barara, which is in Western Uganda, has more matoke plants than even here in central Uganda, which is a shocker, but it's part of the economic activity. So just to clarify, yes, matoke trees, chickens, subsistence farmers are all included as economic activity. Thank you.
Thank you so much for that response. Great to have Himal taking us through the other comment that was given.
Thank you. I'm just trying to look through the comments. I can see the last comment from Mr. Anil saying that now that URA is supposed to increase the tax rate from 12% of the GDP, most of that extra money will now go to overseas to pay for foreign loans instead of business investing this money locally. Therefore, Uganda will not achieve this high growth. Businesses are not as confident as IMF. So here, I would like to inform that there are a lot of tax reforms taking place. There are a lot of projects being undertaken by organizations like USAID and World Bank within the economy of Uganda to really align the tax element within Uganda. Not only does this impact the new tax laws that are planned to be implemented, but also trying to increase the tax net and trying to address the specific issues of the taxpayers. So in long run, with all those efforts being made by the various organizations, as well as the impact of it on the Ugandan domestic taxes, we believe that, of course, the economy is going to really appreciate and develop as a result of this. Although there might be some payment towards the foreign loans, we believe that the employment, the purchasing power, the demand, and a lot of other factors would actually impact on how the economy will perform. So we are of the opinion that yes, the businesses would prosper in long run, considering all these elements. Uganda is on the path of development. I do not see any other major questions. If there are any questions, I would request the attendees to post them.
Thank you so much, Himal, for that input. And I would like to thank everyone once again. Thank you so much for sparing your time to join us in this webinar. For those who maybe have joined us a little bit late, we recorded the session and it will be available. And also you can follow us on our social media links, LinkedIn on Grant Thornton Uganda. On all our social media links, you'll find also the link to this webinar. And also, I would like to really thank everyone once again. Thank you so much for being patient with us. And yeah, thank you so much.